What's going on, guys? Welcome back to another video on the Wolf Trading channel. You're joined with Tony once again, and in today's video we're going to be covering Forex Beginners Course Guide Lesson 2. Remember, I did post the first lesson a couple of days ago. If you haven't checked that video out, go check it out. There was a lot of valuable information in there you do not want to miss out on. But yeah, guys, before we get into this video, if you have not subscribed, please do subscribe. Hit that like button down below, and guys, help us get to 200 subscribers, as we really do appreciate the support. But enough talk, let's get into this video. Alright guys, so these are the topics that we're going to be covering. So we're going to be talking about time frames, tools, entries, types of trading, and types of trends. Alright guys, so let's start with the time frames. In the Forex markets, time frames range from 1 minute all the way up to the yearly time frame. Each time frame has its own use, so it is very important to know what each time frame is used for. Remember guys, every trader is different, so it's very important that you choose the time frames that best work for you. Strategies all have different time frames as well, so it will depend on your strategy too. We mostly use the 4-hour and 1-hour time frame to take trades. However, that does not mean that you should do the same. If trading from the 15-minute time frame to the 30-minute time frame works for you, then use those time frames. So remember guys, with time frames you'll get more used to them, but each time frame has its uses, and it's very important to know what time frames best suit you guys. That's why it's best to start trading on a demo account so you can gain that experience. So now let's talk about the tools. So when analyzing the markets, you need to have a set of tools that you can use to be able to read the markets and predict the future. Types of tools we use include trend lines, zones, levels, etc. Keep in mind that it is very important that when adding tools, you don't want to overuse them. Remember, tools just simply help read the markets. They do not control the markets, okay guys? And make sure to keep it simple, guys. You don't want to have a lot of tools. You just want to keep it nice and simple. And yeah guys, tools just simply help to read the markets. They do not control the markets. The markets do whatever the markets want to do. So right now what we can do is let's just jump to the charts. So I'm going to be showing you guys time frames, the time frames that you should be using, and the tools that you should be using as well. Alright guys, so we just jumped onto trading view right now, and basically let's start by looking at the time frames, guys. So if you look up here, you'll see a letter. You just want to click on that, and basically these are all the time frames that are available. Remember guys, it all depends on you. However, for us guys, we use the 15-minute time frame, we use the 30-minute, we use the 1 hour, we use the 4-hour, the daily, and the weekly. It also does depend on what strategy you trade. Some strategies require different time frames, but anyways, for us these are the time frames that we use, guys. So yeah, so basically right now we're in the, let's go into the weekly time frame. So as you know guys, in Forex trading, you want to be looking for entry opportunities, or you want to be trading from the 4-hour time frame going down. We don't trade in the weekly time frame or the daily time frame, but basically the weekly time frame is just simply there to help us see a full perspective of the market. Remember, in the weekly time frame you can see the whole market. So if you can look down here, this is literally from 2015 all the way up to 2022. So this is literally how the market's moved since 2015, guys. But basically in the weekly time frame we can just see a full perspective of the market, and we can see the direction of where the market is going. So basically that's what we use the weekly for. If we go into a daily, the daily time frame is quite similar. We also just look at direction, we look at trends, we look for trends in these time frames. So we usually start placing trends around the daily time frame, guys. And then like we said guys, from the 4-hour time frame going down, this is where we want to start looking for our entry positions. This is where we want to be placing trades. It depends on you guys. If you're comfortable using a 4-hour, you can. If using 1 hour works for you, you can do that. If using the 30-minute time frame works for you, you can use that, or even the 50-minute time frame. It all depends on you guys. So you will learn that as you go, as you gain more experience in the market. But anyways guys, time frames are important because each time frame has its use. So it's, remember guys, it's very important to start from the bigger time frames when analyzing, and then go into the smaller time frames, guys. So yeah, the next thing we can do is let's look at our tools. So we have the cross, we use the cross, we do use the eraser. We can go on to the next one. So we do use trend lines, guys. So you want to add that. We use the arrow as well. We use the horizontal line. Then we can move to the next. So we don't use any of these tools over here, guys. And then we can come here. So we do use the brush, we use the rectangle, we use the path, and you can use this triangle if you like. And then we do use the call out at times, so you want to add that. And then if we come over here, we only use the head and shoulders, which I'm going to explain more in as we continue the video. And let's go down to this place. So we do use long position. Everyone uses these two, basically those two tools. And yeah guys, so basically these are literally all the tools that we have on our toolbar. We don't have a lot of tools, guys. Remember, keep it simple. But anyways, let me just show you guys the uses of each tool. So this is literally the cross, and the cross is just basically here to read values. As you can see, these are the price values of the candlesticks over here, and it also gives us a clear idea of the date down below. As you can see, we can see the dates at the bottom, guys. So that's just what the tool is. The eraser is just there to remove whatever you place on the markets. When you're analyzing, you can remove your trend lines or whatever it is. So we use these trend lines basically to spot our trend. So you can just place it like that. For example, that would be like a resistance. So that's what the trend lines are used for. And then we use the arrow just to point out direction. If you need to know exactly where the market's going, you point out the direction there. Then we use the horizontal line as levels. So basically these are just levels of sensitivity. We use this line as levels of sensitivity in the market. So literally areas where the market is reversing, that is where we place our levels. So we will get more in detail about levels. And then we do use our paintbrush just to draw whatever it is you need to draw. We use the rectangle quite similarly to a level. Sometimes you can put it as a zone for maybe touches. You can see here the market's respected this area a lot, so that would be a good support. And if you see, we had another nice resistance at the top here, guys. The market's respected, so that's what we can use zones for. And then we use this path just to indicate the direction of where we think the market is going. Maybe you're seeing the market gonna move like that, you can just place that there. And then we have the triangle, which you will learn more about as we keep going, which is it does help you spot setups, guys. As you can see here, this does look like a triangle sort of setup, but anyways, you'll learn more about that. And then we have this call out, which we just use for writing whatever you want. If you want to type some sort of notes or something, you can do that. And then we have this head and shoulders tool, which we will explain more in depth as we go through this video. And then these are just our positions that we use when we're looking to place trades, guys. But anyways, these are literally all the tools that we use and the time frames that we use. Okay guys, so now let's talk about the entries. So when looking for entries, you want to be using the smaller time frames so you can see what the recent price action is doing. Make sure you have entry triggers and only enter after you receive your confirmations. Start on a demo account so you can gain experience and know your entry triggers. Remember guys, patience is important and learning to step away, guys. You don't want to be glued onto the charts. So guys, this is what I was talking about with entries. Remember guys, like I said, you want to be looking for entries in the smaller time frames because that's where the recent price action is occurring, and that's where you will be able to spot good opportunities to place trades. You don't really want to be looking at the bigger time frames. But anyways guys, you will gain more experience and gain more confidence as you continue to trade. So now let's talk about the types of trading, guys. So we have scalp trading and swing trading. So scalp trading, also known as scalping, is a popular trading strategy characterized by relatively short time periods between the opening and closing of a trade. These types of trades are usually held onto for a few seconds or minutes at most. Swing trading, this is used by traders who try to profit from price swings. Swing traders identify a possible trend and then hold the trades for a period of time from a minimum of 2 days to several weeks. So like we said guys, so scalping is just simply holding trades for a short period of time. You might be holding it for a few hours or even a few minutes or even seconds. You don't really hold the trade for a very long time. While with swing trading, you'll be holding the trade for a very long time. It could be 4 days, 3 days, even a week, even a whole month, guys. So you might be wondering, oh, what type of trader am I? Well, don't worry about that, guys. You will learn that as you gain experience. You'll learn which type of trader you are, because you'll see which one works more for you. You might be a scalper or you might be a swing trader, so don't worry too much about that if you've just started trading. So now let's talk about types of trends, guys. So we have uptrends, we have downtrends, and we have ranging trends. Alright, so now let's talk about the uptrends. So an uptrend is an overall move higher in price created by higher lows and higher highs. As long as the market is making these higher lows and higher highs, the uptrend is considered intact. Once the price starts making lower swing highs or lower swing lows, the uptrend could be changing direction, guys. So as you can see, we have a good example over here. We see the market is in an uptrend here. Price is creating lows and highs. But now if you can pay attention to your lows, you can see the market's creating higher lows. So we had a low over here, and then this is a higher low because it's higher than that low, and then we had another higher low over here, guys. So the market is creating higher lows, and then at the highs you can see the market's creating higher highs each and every time, guys. So this tells us the market is still in an uptrend, guys. The only time we know this trend is coming to an end is if the market stops creating those higher lows and higher highs, guys. So right now let's jump into actual market price and let's see some uptrend examples, guys. So now let's look at an example in the market. As you can see, I'm looking at GBP USD, and I've just done some small analysis over here, guys. So currently right now we do see we have a perfect uptrend over here, guys. So what we're going to do is let us start spotting our highs and lows. So as you can see, this is our first low over here, guys. We had our first one over there, and then the market formed a higher low over here, and then we had a higher low again over here, and the market continued to form higher lows each and every time, guys. The market continued to form higher lows, and as you can see, momentum is still continuing to the upside. This is a daily time frame, so this tells us that the market is still in an uptrend. There weren't touches over here, but you can see the market's still been creating these higher lows. As long as the market's creating higher lows, it shows the momentum is still to the upside, guys. And now let's look at our highs. You can see we had our first high around there, and then we had a higher high somewhere around here, and then now we've had our final higher high over here, guys. As you can see, the market's been respecting, and we still do see momentum to the upside because we're creating higher lows and higher highs. So these things do help you a lot in the markets, guys. You want to be looking for your highs and lows because it lets you know what type of trend you're in, and it also lets you know if the market is still in an uptrend, if there's still momentum, or it looks like it wants to change direction, guys. So right now, if the market does break our lows and forms a new low below this trend line, guys, then it means we are no longer in a downtrend, and the market may be looking for some sort of selling opportunities to the downside. So it is very important that you follow the highs and lows, guys. But right now, let's jump back into the PowerPoint. Downtrends. A downtrend is an overall move lower in price created by lower lows and lower highs. As long as the market is making these swing lows and lower swing highs, the downtrend is considered intact. So quite the opposite of an uptrend, guys. Only this time we have lower highs and lower lows. So right now you can see we had our first high over there, and then we had our lower high, and then we had another lower high over here, and the market's been creating those lower highs, and then we had a low over here, and then we had a lower low over here, guys, and we have another lower low coming down there. So this just gives an indication we're still in a downtrend. The market is still selling unless we break our highs, guys. Should the market break above and form a new high, then the market will be changing direction. So right now let's just jump back into the charts, guys, and look for downtrends. Okay, guys, so now let's just take a look at an example in AUD/JPY. Right now I do see a perfect example of a downtrend here, guys. Let's start with the first one here, guys. You can see the market's been creating lower highs and lower lows, so let's point them out. So let's start with our highs. We had a high over there, and then we had a lower high. We had another one over here, another one over here, and as you can see, the market came back and broke out here before we look for those buying opportunities to the upside. Remember, guys, we said when the market breaks this resistance, it looks like a change in direction. So then we see our lows as well. So we can just point out all the lows, a lower low, and then we had another one there, and the last one was here before the market look for those buying opportunities to the upside here when we broke our resistance, guys. And if you come to this side, we can see the market continue to form another downtrend here, guys. So let's spot our lows and highs once again. So we had our lows, and this is the last one, and then we had a high over there when we had a lower one, a lower high, and then this is the last one here, guys. So remember, if price does break this resistance, then it'll be some sort of a retest and confirmation that the market is changing direction and potentially looking for buying opportunities to the upside, guys. So these highs and lows are very, very important, guys. They do help you to see the direction of where the market is going. Knowing your trends is very, very important, guys. So right now, let's jump back to the PowerPoint. Okay, now we talk about the ranging trends. So a ranging trend is the horizontal price movement that occurs when the forces of supply and demand are nearly equal. In a ranging trend, prices move in a narrow band, neither going upwards or downwards, guys. So unlike an uptrend or a downtrend where they're forming new highs and lows, in a ranging trend, it doesn't form new highs and lows. It's simply ranging within price in an area like this. I like to call it a rectangle. It does look like a rectangle, like price is being kept in a rectangle. But yeah, guys, basically in a ranging trend, it just means that there's an equal between buyers and sellers, and therefore the market does not have a specific direction it's going in. Therefore, market price just ranges, and so you'll be buying and selling within an area like this. And so yeah, right now let's actually jump into the markets once again so I can show you guys an example of a ranging trend. Okay guys, so now let's just look at an example from Euro GBP. As you can see over here, I just spotted a perfect ranging trend, guys, and like you can see over here, there's no higher lows and higher highs. Market price is simply ranging between this area over here where we're buying low and selling high. As you can see, the market, it does look like a rectangle, like it's trapped in a rectangle. Let me just put it out like this. As you can see, market price is like trapped in this area, guys. So that's how I always spot these type of trends. But anyways, guys, so basically in this type of trend, you just want to be buying low and selling high. It's not going to form new highs or lows. And so yeah, guys, this is actually a very nice trend. And as you can see, it can be trapful sometimes, because there can be a lot of fake outs at the bottom, guys. But as long as you are buying at your support and selling at your resistance, you'll be okay. And yeah, guys, so this is how a ranging trend would look in the markets. It's never going to be as perfect as the example, but you can understand and you'll be able to spot this trend with ease, guys. But anyways, right now let's jump back to the PowerPoint. And okay guys, so that marks the end of this lesson. I hope you did enjoy it, and I hope there were some valuable things that you did take away. And yeah, guys, I will be dropping a third part. It'll be dropped in the next few days, so stay tuned for that, guys. But anyways, it was Tony, and I hope to see you guys in the next video.